If you don't know already, my name is Nicole Magnusson. I hope you've enjoyed the event so far. I'm a financial advisor with Point-to-Point Wealth Planning, a private wealth advisory practice of Ameriprise. So I work with a great team of advisors and staff who have over 90 years of combined experience in the field. And I've been with the practice for about 2 years now. And I became an advisor for probably some of the same reasons you all have created your businesses or want to create a business. And that's to fill a void, to bridge a gap, or to tangibly help others. And like all of you, I also firmly believe that small businesses are the backbone of the country. And each of you have a part in that, and I applaud you, and we'll get through this. So I'm gonna go ahead and share my screen. I have a presentation, and then there's a presentation within the presentation, and I'll have Q&A at the end as well. Can you all see the presentation?
Mm-hmm.
Great. Hi, Carrie.
Hey, Nicole, how are you doing?
Good, how are you?
Good.
Good, all right. So I'm gonna get my screen all ready for you. So this is setting up your business finances for success. And in this breakout, I wanna bring value to people at all stages of being a business owner. So I'm gonna go from folks with just kick-ass startup ideas but no long-term plan to owners of sustainable businesses who are looking to acquire, to expand, or sell off to retire. This is gonna encompass quite a bit, so hang in there. There might be stuff that's over your head, and there might be stuff that you're like, of course, duh, I know this.
Do you have handouts?
I will have this presentation available after it's done, as well as resources. It'll be on the Brand Swan website after the presentation.
Okay.
All right, and I'll try to move a little slow, so if you need to take notes, you can. So I'll be kicking off with the financial basics for individuals. I'll move into the importance of a written financial and business plan. I'll talk about business review tools, and then I'll shift to an overview of the stages of business finance. I'll also cover some of the COVID-specific legislation, how it affects small business owners. And I'll touch on some helpful resources towards the end, and if there's time, I'll open it up with a brief Q&A. All right, so your personal finances tie into your business finances much more than you may think. That's why it's critical that your personal finances are in good order to ensure that your business is being run most efficiently and effectively. And I also, before this breakout started, talked to Christy Bagat. She's also a presenter. She works on business assessments and different systems that you can put in place to get your business running efficiently. So after this, if you want more information on how to run a business efficiently and putting systems in place to do so, you might want to reach out to Christy. And everybody's recording their breakout, so it should be available after this. All right, so in the first stage, the bottom stage of this pyramid, it's the struggling stage. And I think everybody's been here. That's when you're falling behind every month. And this was college for me personally. I was on my own, aged out of foster care, living in a subsidized housing apartment complex, and working at Red Lobster 30 hours a week while getting my bachelor's. It was a tough time. I was definitely struggling. It isn't a fun stage to be in, but I'm glad I experienced this stage because it reminds me of where I came from and compels me to give when I can to people who might be in the struggling stage now. Some ways you can get out of this stage are to seriously start budgeting to track expenses and income. You can cut discretionary expenses when and where you can, and you can seek out assistance that's available. And remember that asking for help isn't something to be shameful about. We all have to do it every now and then. And you also want to lean on support systems you have. This isn't, even though it feels like you should, this isn't a time to isolate yourself and be in a silo. Reach out to folks because there are people out there that want to help. The next stage, oops, sorry about that. The next stage is surviving. Now, this stage is when you aren't making much headway, you're not really falling behind anymore. To move up the mountain from here, you're going to want to work down high interest debts. These eat away at your cash flow and take advantage of refinancing in low interest rate environments right now because interest rates are historically low. So it's a good time to refinance, whether it's a mortgage or rolling student loans and consolidating them. it's a good time to refinance. You can also develop a cash reserve or emergency fund of at least 3 months of expenses. But I recommend 6 months, 6 months to be safe. I tend to be more conservative. So the third level is stabilizing. You're working hard, you have your eye on the prize, and have a little extra at the end of the month, but don't know what to do with it, which is where a lot of people end up. So this is a common stage for an average person in their 30s, 40s, and sometimes 50s. And sometimes people slip back into stages, but you'll make your way to the top. So to climb to stage 4 from this third stage, you want to start saving systematically for future goals. This could be a child's education, expansion of your business, your dream car, a beach house, things like that. You want to build a retirement plan and investment strategy with a financial professional. I'll plug myself. I'm a financial advisor and I have a great team, but there are lots of financial advisors out there and you want to find your match. You also want to make sure that your assets are protected, including your business, by getting different kinds of insurance. Personally, you should probably have disability, life, and long-term care insurance. But, you know, it changes for everybody and everybody has their needs. So now you're at the 4th stage, which is the solid stage. You're on track for all your goals. All that hard work is paying off. There's one more stage and you're king or queen of the mountain. Here's what you want to do to get to that surplus stage. You want to pay off all debts so that you're debt-free once you get to that surplus stage. And you want to maximize your contributions to your retirement plan. Now you're moving into the peak, the surplus. So this stage, you have more to live on than you need. So more money than you know what to do with. The only thing left to do here is develop a legacy or giving plan if you're charitably inclined and enjoy the fruits of your labor. So it's good to know where you stand as an individual with your finances because you are the foundation of your business. Without you, your business wouldn't exist and the niche that you're serving wouldn't benefit. So you have to make sure that your personal finances are in order. And the best way to move up the ladder of cash flow, wealth, success, or anything else worth having is to plan for it. Think it through, write it down, revisit it regularly. And that brings us to the next topic, the importance of a written financial plan and business plan. Do you have a comprehensive written plan or financial plan for your businesses? Anybody?
I have a business plan.
That's good. That's awesome, Denise. So sadly, that's not the norm. So if you don't have a business plan or if you need to update it, do research, create one, and update it. There are free resources everywhere, one of which is the Small Business Administration, and that literally takes you step by step through a business plan. And this link will be available after the presentation as well. Similarly, if you don't have a written financial plan, you should seek out a financial professional to help you create one. Whether it's with me or another firm, I urge you to seek out a licensed financial advisor to help keep your finances on track and keep you aware of legislative and regulatory changes that can affect you personally and professionally. These changes are hard to keep up with, and we do our best to kind of track them and see what's appropriate for the clients that we have and share that information with them. My practice personally offers complimentary financial plans for people who aren't ready for comprehensive financial plans. And we also offer those more complex comprehensive financial plans. We can visit things like retirement planning, investment strategies, business succession planning. We have merger and acquisition contacts. We can facilitate that. And we also keep in contact with CPAs, tax professionals, investment analysts, and attorneys to stay in the know about industry changes that affect you. So while gathering information on your business plan or preparing to update your current plan, you'll likely have to take a closer look at your business. So a lot of great ideas, as you know, turn into businesses, but they end up failing because of lack of planning. Don't let your awesome business ideas become a statistic due to poor preparation for success. Schedule time to create a real plan. Set time aside, whether it's weekly, monthly, annually. Even if you have an existing plan, you should revisit it annually to make sure that you aren't drifting from your mission, vision, and goals. Having a deeper dive into the details of your business will help keep you grounded and help you weather the storms like the economic downturn we're currently facing. So some strategies to consider while looking closer at your business, putting the magnifying glass on it. are the 5 P's of business. And you may have heard of this, you may have seen this. There's lots of different P's that you can use. My colleague, Darren DeMars, who's also a financial advisor with my firm, he's worked with small businesses in the past, and he also shared this with me and gave me some pointers on questions you might want to ask in each aspect of these P's. So the first P is product. This is, what is your product? Is it offered by competitors? Is it unique? Is it needed? Look at pricing. Do market research. What's your margin? How much do you need to charge for each thing? How much are you paying yourself? A lot of business owners forget about their own salary sometimes. People is the third one. Who is your target consumer? Who are your competitors' target consumers? What are the competencies of your employees? The fourth one is place. So depending on your product, whether you have a physical product or a service, a novel style of ketchup, makeup, yoga classes, consulting services, you need to know where you want to be. So what stores do you want to be in if you need a store? What shelf you want to be on? Do you have a building? What about an online location? What's the demographic makeup of your location? Does your business work best in that area, or could it serve better elsewhere? The fifth one is promotion. This is basically marketing and advertising. There are a ton of great contacts, as you know, on this event that specialize in marketing and advertising. So I would urge you to check those folks out if you need improvement in that area. So a real quick story I want to throw in. We had a prospective client. They became a client, but they were prospective. They were coming in to talk to us about their situation. It was the father and son. The father was ready to throw $100,000 of his retirement money into his son's brewery dreams a while back. His son was a great brewer, but had no business expertise, had no idea how far $100,000 would go, and jumped into things head first. So the son didn't have a timeline for his beers he wanted to brew, or an idea of what products he would sell in addition to the beer. And that's the first P, is product. He had no price points for his product or any idea how much he would make for a salary, which is pricing. He had no thought out target market, people. He also lacked a marketing plan, which is promotion. That's the fifth one. I skipped over place because he actually did have a location, but he didn't read the fine print on the contract that he signed for the location and got stuck in a binding and expensive contract. In the end, the father and son didn't have a plan for the business or a financial plan for their personal finances, and ended up legally liable for more than they bargained for. Thankfully, our team was able to inform them of their shortfalls and help protect them and grow what they still had. So a lot of you also have probably heard about this, but I wanted to review it for people that might not have. It's a SWOT analysis, and this is another way of learning more about yourself and your business and your competitors. So a SWOT analysis for you and your competitors includes your strengths, which is an internal positive, and that's what you do well and what you enjoy most. The W is weaknesses. That's a negative internal, and that talks about what you can improve on and what can you absolutely not stand doing. If I did a SWOT analysis for myself personally, I would most not like doing laundry. I hate laundry. It's one of my least favorite things. The O is opportunities. That's an external positive. And this is, what are your short and long-term goals? Are there connections or partnerships that you could make? And are there funding possibilities available to you? Knowing the T is threats, and what are the obstacles you could face in the short and long term are the threats. And that's a negative external. Knowing your downfalls and uncovering your strengths will bring you a unique perspective on your business and identify the best avenue to your business success. For example, and I'm going to be vulnerable, so I know that my weakness is lacking confidence at times. Because of my awareness of this, I make sure to be as knowledgeable and prepared as possible so that I don't get frustrated. Working to overcome this weakness has led me to new opportunities and engagements. Doing a SWOT analysis on competitors can work in your favor because you'll know what their weaknesses are, where their weaknesses lie, and can find opportunities to either partner to strengthen, or you can maybe acquire their business if the weakness starts to erode their business. This brings me to the condensed 3 stages of business finances. So moving in from individual to business finances. Does anyone have any questions so far? No? Okay, I'm gonna move on. So the 3 stages of business finances, if you're a business that's a service type business, you probably have recurring revenue, which is great. Your business tends to do better during market slowdowns, but when there are severe situations like the COVID situation we're facing now, even recurring revenue businesses suffer as folks cut the cord on subscriptions and contracts. Generally, retail type businesses like jewelry stores and candy shops are having an even tougher time because they don't have that recurring revenue to sustain themselves. They need bodies in the stores to bring in money, and those bodies just simply aren't there. So the business cash flow ladder is startup and survive at the very bottom. And according to the Bureau of Labor Statistics, the BLS, approximately 20% of new businesses fail during the first 2 years and 45% during the first 5 years. Don't be a statistic, keep grinding, keep your vision in mind, create that plan and stick to it. Memorize your sustainability requirements. These are like the numbers needed to stay afloat. Your business plan should show you exactly what your business needs to do to stay in business. So what's the minimum revenue you need to run your business each month? And back that into how many sales does that translate to? How many contracts is that? How many prospects do you have to contact to secure that? And are you reaching that? You also want to make sure you insure your business early. If you can, protect against the unexpected. There are many different kinds of business insurance. You have to do the research for what works best for you. And the SBA actually has really good resources for business insurance. You also want to keep a cash reserve or emergency fund as a business owner, and it should be the equivalent of about 6 to 12 months. It's more than the individual is recommended to have due to the nature of running a business and the expenses included. So try to earn some interest on this cash reserve that you have too. You don't just want it sitting in a checking account unless you're going to use it for the short term. Some money markets, cash equivalents, and ultra short-term bond funds can range from 0% to 2.3% from what I've seen. And that can depend on the amount held and offer liquidity and much less volatility than equities. You also want to try to seek out grants and awards that may help with cash flow in this phase. So next will be finding break even once you get past the startup and survive. This would be revisiting those sustainability requirements. What's the minimum you need to run your business each month? How many sales? How many contracts? Are you reaching that? Or are you exceeding that? You should also be at a more solid financial standing at this point with less worry about the near term. You want to maintain your cash reserve of 6 to 12 months of expenses and replenish it if you've had to tap into it for emergencies. Once the cash reserve is topped off, start making sure you have some systematic savings in place for yourself. As a business owner, you want to pour everything into your business, but most likely don't have access to retirement plans like 9-to-5 folks with 401ks. So opening an IRA or retirement, individual retirement account is super easy and it's affordable. There are different kinds of IRAs for different businesses, but the important thing is to have one to start saving into. The earlier the better. And once you have enough invested in your IRA, you start growing that money with the investments. Compound interest is seriously a beneficial thing. You also want to consider securing a credit line. And you have to be careful because credit can be dangerous, but as long as you're informed and knowledgeable, you can do it. A business line of credit with a bank allows you to tap into that credit if there's revenue loss, business shutdowns, and similar situations. These rates can be competitively low. There's some stipulations with the business lines of credit, but basically it's like having a large credit card with a low interest rate. And there are perks for business lines of credit. There's also home equity lines of credit, or HELOCs. These are a tool to have in your toolbox if you need them. If you have equity in your home, you may be able to secure a HELOC and have this available for emergencies as well. Credit cards should be one of the last resorts for businesses unless they are paid in full each month and taken very, very, very seriously. The third stage is profit and sustainability. So if you're in a more secure phase of your current business, you can start bucketing excess profits that you may be having in different pots with the help of a financial advisor and a tax professional. There are lots of tax strategies that you can put into place as a business owner. And partnering with a financial professional and a tax advisor can help you find all those little strategies and perks and sometimes loopholes. Some of these buckets that you can start putting money into, if you're at this point, are short-term, mid-term, and long-term, moving from a conservative to aggressive allocation. You can also bucket in tax-deferred accounts, which are IRAs and retirement plans. You can do taxable, which are brokerage accounts. And then you can also do tax-free, like Roth IRAs and insurances. With Roth IRAs, you pay taxes on the money going in, and then it's tax-free later going out. So you want to do that if you're in a lower tax bracket now. You can also pay down your debts at this point to whatever point you can, and reinvest in your business to allow for that gradual growth. All right, now that the basics have been covered, let's move into the current state of affairs, which is what you probably all tuned in for. Let me get this started. Hopefully it works. Bear with me. Can you all see that? Good.
Yep.
All right.
Yeah, I see it.
What was that?
I see it. Just wanted to let you know.
Awesome. Thank you. So before we begin, I want to remind you that neither Ameriprise Financial nor its affiliates offer tax advice or legal advice. This presentation is informational. I have to disclose this. So please consult your tax advisor or attorney about your specific situation. Additionally, I'll be skimming the surface of some of this legislation because it's geared toward larger businesses, and this doesn't apply much to the attendees right now. So let's move on. All right, and I'll try to slow down through this so that you can take notes if you need to, but this will be available after as well. So in March of 2020, there were 3 pieces of legislation to fund both a medical response to COVID-19 and to offset the economic stresses of Americans. The largest package was the 3rd one, the CARES Act, and we're waiting to see how Congress will expand that as the pandemic remains a threat. So the Families First Coronavirus Response Act is part of the second of the third of the 3 legislative pieces that were put out because of COVID. This is a sick and family leave credit. And this entitles the eligible employer to a fully refundable tax credit equal to the required paid family and medical leave or qualified family leave wages. This is one of the ones that I wanted to skim over. It's available for information, but it's not really relevant to a lot of super small businesses. So there's also the Social Security tax delay. This is an interesting one. And again, I always recommend talking to a tax advisor before making moves on this or trying to take action. But the Social Security tax delay is another benefit designed to help business owners maintain cash for the business now by delaying when the employer portion of the Social Security payroll tax needs to be paid. Employers can delay up to 6.2% of the employer contribution for the remainder of this year, 2020, and they can deposit it into 2 equal installments at the end of 2021 and 2022. So it's just delaying the Social Security tax, but you can spread that out to make it more reasonable for you. There's also the Employee Retention Tax Credit. So the last slide covered a delay in the payroll tax paid by an employer. This Employee Retention Tax Credit is a refundable tax credit based on certain conditions, partial or complete suspension of operations because of government order or a greater than 50% drop in gross receipts in a quarter of 2020 compared to the same quarter in the prior year. It can get really jumbled because it is taxes, but it basically allows you to, there's a benefit because you can receive a tax credit if you've been affected. But this cannot be used if the employer receives the PPP loan or the Paycheck Protection Program loan. So it's kind of like when you try to stack coupons at a place. Sometimes you can't do all of them. So you have to talk to a financial professional to see what benefits you most so that you don't negate another benefit by signing up for one. All right, so the Paycheck Protection Program. This is one I'm sure you've all heard of. You might be taking advantage of it now. But this is designed to provide a federally guaranteed forgivable loan with a 6 to 12 month period before the first payment is due. It aids employers in retaining employees and assistance with other operational expenses. The PPP loans cannot be used with the employee tax retention credit, like I talked about before, or the payroll tax delay, also before. The program provides cash flow assistance through the federally guaranteed loans to eligible employers that maintain their payroll during this emergency. For employers who maintain the payroll, the amount equal to payroll costs, interest in mortgage obligations, rent payments, and utility payments are eligible to be forgiven if incurred and paid during the 8-week period beginning on the loan origination date. No less than 75% of these loan proceeds must be used for payroll costs for program eligibility and loan forgiveness. So loan forgiveness will be reduced if a borrower reduces salaries and wages by more than 25% or reduces their number of employees during the 8-week period. Small businesses that may have reduced their workforce between February 15th and April 26th may still be eligible for loan forgiveness if they bring back those employees or restore their wages by June 30th. So that's something to keep in mind too. The PPP has additional attractive features, such as no SBA fees on the loan. The forgiveness amounts are non-taxable, which is really important. Some employers may be afraid to pursue the PPP loans, even though they'll be forgivable because of the taxable nature sometimes of forgivable loans. Some student loan forgiveness programs, you actually have to be careful. They can be taxable if they're forgiven. So say $100,000 of your student loans, that's like having $100,000 of income, and you need to be careful about that. So this does not, that's not like this. This is not taxable. It also offers 6 months of deferral with maximum deferrals of up to a year. Eligible entities will be able to apply if they were harmed by COVID-19 as of February 15th in order to help restore wages or bring workers who may have already been laid off back into payrolls. Loans are available through June 30th, 2020, the last I've heard. They may be expanding things. And although the PPP's interest rate can be as high as 4%, U.S. Treasury guidance currently sets the rate at 1% as of April 7th. So it's still at 1%, which is very, very attractive. The Small Business Administration offers other loans and programs, such as the Economic Injury Disaster Loan, or I call it EIDL. It typically is used for natural disasters, but now it's available to businesses affected by the coronavirus pandemic. If you have a low payroll or need funds in excess of the amounts you qualify for under the PPP, the EIDL loans, which can be used for more than what the PPP loans are able to be used for, may be appropriate, but the EIDL loans, the Economic Injury Disaster Loans, are not forgivable. They're not forgivable at all, so you have to be careful about that. Lastly, the SBA has made available the Economic Injury Grant, or Emergency Economic Injury Grant, EEIG, and that's up to $10,000 to affected businesses that it doesn't need to be repaid. I don't know how this bucket of funding is doing right now. I haven't had a chance to check if it's flush with cash or if they're running low. But if you're looking for a grant of this size, around $10,000, and you're hurting because of COVID, look into it through the SBA. So this piece is also pretty tax heavy, but it's important, and it's more for sole proprietors, partnerships, and S-corps. So the net operating loss, or NOL, it provides an increased ability to apply NOL, or net operating losses, in 2018, 2019, and 2020 tax filings. Carry-back losses mean the business owners can apply them to previous tax years, and this lowers taxable income paid in the past, which could generate a tax refund on previously paid taxes, which is pretty awesome.
Is that going to go forward?
We're not sure about that right now.
My situation is weird because I started my business in August and I wasn't in the black yet. I wasn't expecting to be. Like most people, you're not going to make money initially. Most of it's, and of course it hit right when I was supposed to have my ribbon cutting. So I'm probably going to have an additional 12 months before I start seeing actual, I'm on the hook for rent and stuff like that. But it would be nice to think that it could spread that tax over the losses that I've had in this last 2 years.
Yeah, I will definitely, I'll look into that for you, Denise.
Thank you. Thank you.
Carried forward. Sure. Yeah. So let's see. So this act, let's see where I was. Oh, so the CARES Act, it provides the 5-year carryback for losses arising in the tax year 2018, 2019, and 2020. Previously, there was a Tax Act in 2017 that stopped that. The CARES Act restarted that for you. So, and again, consult a tax advisor if you are able to apply those carrybacks.
Yep. Yeah. Thank you.
Yeah, sure. Yeah, I'll get that answer for you though, Denise.
Well, it's more of a decision like, when do I decide to jump ship?
Yeah, well, and luckily the tax deadline has been extended to July 5th.
Mm-hmm.
So, there's more flexibility in figuring out what to do now. Because if you were trying to figure it out by April 15th, it would have been a problem. Okay. So, the final significant benefit for small businesses is the relaxation of the interest deduction limits. Section 2306 of the CARES Act allows for the ability to deduct business interest expenses in 2019 and 2020, though partnerships are limited to 2020 for the increase. This deduction can apply to a higher percent of adjusted income in 2019 and 2020. If the 2019 adjusted business income is higher in 2019 than in 2020, the business owners can elect to use the higher 2019 figure in making the deduction calculation. For partnerships, the 50% limitation will apply to income earned in 2020, but generally not 2019. And for 2019, 50% of the excess business interest allocated from the partnership to the partner will be treated as business interest and paid in 2020 and not subject to the business interest deduction limitation. The remaining 50% will continue to be subject to the 30% limitation, but can be carried forward. Again, if you have questions or feel this might benefit your business, make sure to contact a tax professional. All right, so what are your next steps? If you have a financial advisor or tax advisor, make sure to meet with them to discuss how your financial plan and your business have been affected by the current environment. Ask about your options available due to the CARES Act and seek out actions to consider in the short, mid, and long term. We know the CARES Act was supposed to be a saving grace for thousands of small businesses, but we were discussing earlier before the breakout that not so small businesses have benefited from this, like Shake Shack and Harvard University.
They've given the money back, but they had advisors to tell them to go and get this. The problem is, for most people, it's just one or two of you, and it's such unknown territory.
Yes, and those places that did take the loans, unfortunately, the language allowed for them the advisors to suggest taking those loans, even though they need them, because it was so flexible.
Yeah, free money. Why would you not?
Exactly. So, there's been a lot in the news with possible expansion and revision of the CARES Act. So I'm keeping an eye on that, and we're hoping that small businesses will get the help and support that you desperately need. So just keep in mind, bookmark the SBA. They have up-to-date information as well, and lots of funding resources and real-time data. So I'm going to move on. Okay, I have some resources for you and a couple other tips and advice. Let me see.
I haven't figured out how to use Alignable. I got hooked up with that ages ago, and I get stuff. I don't know what to do with it. It feels like it's a weird version of Facebook or Nextdoor or something.
Yeah, I found that Alignable, and I'll get to more detail in a second, but Alignable is useful. You just have to kind of take the time to figure out what you're doing on it. There are a lot of great businesses and opportunities to network with other businesses. I haven't seen the opportunity for getting clients or prospects or customers from it, but there are ways to
referral basis
and referrals and lots of great articles. One thing that I urge you to do if you're on lots of social media, Twitter, LinkedIn, Facebook, check out the Small Business Strong hashtag. That has access to great videos and tips from SBA representatives and small business owners like yourself. It also can inspire you to keep going too. There's a lot of good information there. You can also consider joining Alignable, like Denise was talking about. And it's an online business-to-business networking and support site, basically. It has good articles and advice for folks in our shoes. So one of those Alignable articles I wanted to reflect, and this will be available after, they talked about shedding costs if you need to right now in a volatile environment. And some of the tips that they offered were become familiar with every single penny leaving your business. This is best done with an accountant, but if you don't have one, go through your spreadsheet or your QuickBooks or whatever you have and figure out where to cut costs. If you have vendors, limit as much as you can, ask for reduced prices, and request forbearance if you have to. You can also talk to landlords, mortgage providers, and insurance companies. They don't know you're struggling unless you tell them and might have offers available. I know a lot of auto insurance companies have given temporary cuts to premiums, and mortgages are offering different deals as well. It's a low interest rate environment, so if you can find it, refinance your mortgage. I know I got a 3%, which is great, from 5.25%. We're saving tons. You can also consider switching service providers to lower costs. Some internet providers are offering several free months of internet to certain industries and businesses. You can also reevaluate your products and services. Use the data that you have to figure out if all of your products and services are making profits, or reaching the profit line that you want to reach. If not, consider discontinuing a failing product or service for now temporarily, and bring it back when you're in a more comfortable place. You can also, if you have employees, consider cost cutting to prevent eliminating the positions fully. So maybe a reduction in benefits, shorter work week, or pay cuts temporarily. You can also take advantage of a tax deadline that's been delayed to July 15th if you know that you'll owe taxes. So if you can delay that, again, talk to a tax advisor, but if you can delay that, it's a good thing to do to cut costs now. Another Alignable article that I found talked about increasing revenue now. And it's just a few ways, but they're creative, and that's the way to do it. You have to digitize your business and find creative ways to be online where people are. You also can offer gift cards or gift certificates for future use, and that will help bring in revenue as well. You can adjust your marketing and advertising strategies. I've actually noticed that a lot of billboards and radio ads are still advertising that you can come out and see them and take part in their business, but they haven't adjusted their marketing strategies. They kind of had it on autopilot. So revisit what you have and align it to the current environment. You can also ask your staff or partners or friends about ideas to generate revenue, because you may not have all the answers. I don't have all the answers. I don't know your business specifically, but you can ask your staff or partners to help brainstorm ways to generate revenue. You can also consider price adjustments if it makes sense. Lastly, on my little piece is update your LinkedIn and find a LinkedIn group in your industry to hear from leading experts and analysts. I use LinkedIn very often. I love it. And I'm able to connect with tons of people in my industry to get advice and get their experience from different points of view. There's also the Small Business Administration, like I've been touting the whole time. They have tons of resources. There's the Delaware Department of Labor if you're in Delaware. If not, go to your Department of Labor website, and they may have resources that are state focused as well. And the same goes for the city that you're in. There's also point-to-point wealth planning, of course. I work there. I'm an advisor there. We have 6 other advisors and lots of staff. We're always open to chatting with people. And the first meeting is always complimentary. It's just to figure out where you're at and get you to where you want to be. And lastly, we work closely with a CPA, Adam Nieslis. He's located in Newcastle, Delaware. He's really thorough. So if you're looking for a CPA or tax advisor, he might be a route to go. But there are tons out there.
Yeah.
Oh, no problem. Well, thank you all once again for your time and attention.
Yeah, this was great.
Good. I'm glad you got some out of it. I
definitely.
appreciate you listening in, and the feedback was helpful. My information can be found on the Brand Swan website and my website as well. I'd love to hear feedback about the breakout session. And, you know, if you have any questions, feel free to reach out to me. Ooh, there I am. Oh.
You were the owl? Okay.
Yes.
My computer went haywire. And again, if you have specific questions about your situation, or if you're interested in a complimentary consultation, don't hesitate to reach out. I'm always available.